Morning, team. Welcome to the Real Estate Walk and Talk. The numbers for months of inventory in Jacksonville for May are in. Months of inventory tracks the number of houses in inventory versus the number of houses that sold the previous month. And it's a great indicator for where pricing is going to go in the short run. And so the numbers are in. It is at 3.46 is the months of inventory in Jacksonville in May. So what does this mean? Well, historically, an equilibrium market is defined as 6 to 7 months of inventory. So if you are below 6, that is what's known as a seller's market. And that would indicate higher than normal home price appreciation in the short run. Call it the next 6 to 12 months. And if you are above 7, and if you go higher and higher above 7, then that would indicate it's a buyer's market. And it would be lower than normal home price appreciation. Doesn't mean depreciation, just means lower than normal. And we've got a couple folks walking with me on the Real Estate Walk and Talk this morning. Welcome to you all. Thanks for being here. We're talking about months of inventory and what that means. The number came in at 3.46 months of inventory in Jacksonville in May. And so lower than 6, seller's market, higher than normal home price appreciation. Above 7 is, did I say that right? Lower than 6, a seller's market, higher than normal home price appreciation. Higher than 7, a buyer's market, lower than normal home price appreciation. All right, so we're at 3.46, so that means it's a seller's market. And what is going on here is what's been going on for many, many years now, is that we have an undersupply of housing, and that would indicate higher than normal home price appreciation. For all of you history buffs, the historical average home price appreciation per year in Jacksonville since 1991 is 4.3%. So this is a good sign as far as pricing in Jacksonville. This is the first month of fully being through coronavirus, and we had 2,400 sales in Jacksonville. So people are still buying houses, and this is just further substantiating what I talked about yesterday in the Wall Street Journal article that, I just don't see prices plummeting at all. There is strong sales still, and there's just chronic undersupply. And that's why Lawrence Yun, chief economist for the National Association of Realtors, said, I just don't see prices declining over the next 12 months. He said there would have to be prolonged job loss. And even if there is prolonged job loss, it still might not be enough to overcome the undersupply in housing. So, good information for all of you. We're going to talk more about this today. I've got a couple ways for you guys to hang out with me a little bit more today. So I'm going to be doing, I was invited on the NuView virtual summit today. It's a really cool event. I would encourage all of you to go there and register. It is a full day of trainings, and I was invited to speak. I'm going to be teaching how to choose the right market to invest in rental properties. And so that's going to be all day for the summit, but I'm specifically speaking from 11:45 to 12:15. I put a link in the description. My good friends over at NuView, Jason DeBona, was on the Not Your Average Investor show with us on Tuesday. So I think very highly of them, and I appreciate the opportunity. And so would love for you guys to join me there. So go there, and then right after that, I'm jumping onto our own Q&A. We do every Thursday at 12:30. For all of you, any questions that you have, it's largely driven by your questions, very informal. You get to ask me whatever you want. Jacksonville, real estate related, whatever it is. So I'll be there at 12:30 to answer those questions for you guys. So we get to hang out a lot today, guys. So have a wonderful day. I'll see you in a number of different ways throughout the day, and go crush it. See you.